Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, October 2nd at about 1:45 Eastern. Well, President Donald Trump's COVID-19 diagnosis triggered a sell-off in stocks and oil at the open today as investors moved away from risk assets, but the indexes have recovered quite a bit since then. New orders for U.S.-made goods increased less than expected in August, although business spending on equipment appeared to be recovering, which likely supported the economy in the third quarter. Manufacturing, which accounts for 11.3% of the U.S. economic activity, is recovering from its pandemic lows as businesses replenish inventories. And on that note, let's move on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at our daily chart of the S&P 500 Spider, symbol SPY. Now, for those of you who are maybe new to Toni's market, to the market now, the reason we watch the S&P 500 so closely, or in this case the Spider, which is the ETF that follows the S&P 500 benchmark index, the reason we watch that closely is because in bull markets, 3 out of 5 stocks will follow the S&P 500 higher. In bear markets or down markets, 4 out of 5 stocks will follow the S&P 500 or the Spider lower. So this is kind of our crystal ball for the broad markets, and that's why we keep an eye on the S&P. It's kind of like most of the time, as so goes the S&P 500, so will go much of the rest of the market. Now, of course, there are some exceptions, as there are in every part of the market. There are exceptions, but generally speaking, we can look at the health of the market by watching the S&P 500 Spider or the S&P 500 itself. So back to our chart now. When I captured this chart today, the SPY, if you can see right here, was trading at $334.60. That's about $33.46 on the S&P 500 itself. It is still trading. It popped up higher today, and actually a little earlier this week, it popped up higher over that all-important 50-day moving average, which is now coming in. It's the green line you see here, now coming in at 335.65. But the SPY popped above it Thursday, I should say, yesterday, Thursday, and closed above it. That was a good thing. But then this morning on the news of President Trump's coronavirus, then of course it gapped down. It hasn't yet moved back up and over that 50-day line. So as I captured this chart today at about 1:45, the SPY was trading again at $334.60. Now we do remember that it made a new all-time closing high at $357.70 on September 2nd. Then it ran out of breath, slid south, and moved down, as you can see, stepping down through September. September is typically a very grouchy month for the market, especially if August was a positive month. And as you can see here, this is a 20-day moving average, the red line. August was very positive for the market, so then it typically gets, as I said, grouchy in September, and a lot of times it might stay grouchy through October too, but we do want to keep an eye on this. Our nearby support here is down at 320. If we need it, that'd be 3,200 on the S&P 500 itself. We have more potential support here at 310, where you see the black line, the 200-day moving average coming in. So right now, going into next week, if the SPY can move back above and stay above the 50-day moving average, maybe then it could trade in a range or at least remain in its uptrend. We've got an uptrend here going. Yep, higher lows and higher highs, that's all we want. But we need to keep those higher lows in here, or at least keep the 320 low that we had in the middle of September. So Please keep an eye on the SPY in the coming week. We're going to be starting in third quarter earnings season. That will go on for about 3 weeks. You know we're approaching the election. We've got a lot going on here. So please trade carefully, and please, please, please keep track of your protective stops. The next chart we're going to look at today is the Invesco QQQ, commonly called by traders the cubes. This is a daily chart. Now, as you all know, this is a major index in the stock market. The Nasdaq 100 is the top 100 non-financial holdings of the Nasdaq stock market. And its major holdings are Apple, Amazon, Alphabet, Facebook, Microsoft, Intel, that whole group of momentum stocks, tech stocks. They are what keep the QQQ going. Now, when I captured this chart today, the cubes were trading at $275.14. It's right at the 50-day moving average. The green line, that's trading at $275.17. So we're like 3 pennies below now the 50-day moving average. Now, of course, it too had an all-time closing high on September 2nd at $302.76. It too started falling on September 3rd and kept stair-stepping down again below the 50-day moving average. Now it is, today, right now, it is just 9% below its all-time high. So it's not in correctionary. We're down a little further. If it got to 10% or below, we would call that correction territory, but it isn't. It's just hanging on by that sliver of 1% right now. Again, we're kind of just sidestepping sideways this week. We do have very important support, potential support right where it is. It needs to hold there. Otherwise, it has potential support down here at 261. We can go down to 250 if we want, 251, and then on down toward the 200-day moving average, which is coming in at 235 and a little support above that at 240. So we've got many layers here of potential support should the cubes need it. So again, to remain bullish, the cubes really need to stay above the 50-day moving average. Please pay attention to your stops, and please remember one thing. If the Qs start down here, and if they do, the S&P probably will too, remember please that there's nothing wrong with cash. Cash is a position, and raising some cash in a dicey market is sometimes a very smart thing to do. And now we'll go on to our third chart. Our third chart today is a daily chart of the Invesco S&P Global Water Index ETF, the CGW. The CGW has 58 holdings in it. Top holdings are American Water Works, Xylem, Danaher, and IDEX Corporation. And whenever I look at the water ETFs, I always think humans always have to have water. That is non-negotiable. That's something we always have to have. Now, when I captured this chart today, the CGW was trading at $41.92. The all-time high was back here in February of this year at $43.69. Now, of course, after it made that high with every other index on our new knowledge back then of coronavirus, also the global water index fell as well, and it fell down to a low of $27.65. Then, as you can see, it bounced dramatically. That was a good thing. Made a higher low. That's what we want to see. Actually, a pretty sharp inverse head and shoulders here. So it did that. And then it started up, but it was all over the map here. It was very confused. There's a lot of industrial stocks in this as well as utility stocks, but everything is devoted to water. It did have a kind of a spotty ride here. And of course, this ETF is not meant for day trading. It is not a high volume ETF. So when when the buyers and sellers get confused, the chart looks kind of dicey as well. And I don't get into disorderly assets with dicey looking charts for sure. So it was up for grabs here, but again, we have to remember we always need water. Came up to this high in June, traded sideways, but at least it's above the 50-day moving average, and now it has gotten orderly, and orderly is good, and it's trading in an uptrend. It made a little move down here with the rest of the market, but it's still trading. It did move down here under the 50-day moving average, but popped up again over its 50-day and 20-day here this week, and is trading today at $41.92. I am going to get a little defensive here again because of the situations we have, as you know, again, earnings, the election, and so forth. So the CGW provides that if the CGW can break, it's at 41.92 right now. It's been trading in this with these consolidation highs right here. If it can break above 42 and stay there in the coming week, and if the market remains reasonably calm, I may add a position of the CGW to my portfolio. I will place an initial stop. You see it down here at $40.50, and that will be just below the 20 and 50-day moving averages, again at $40.50. I realize that's a tight stop. You can lower yours a little more if you want to. If or when the CGW, I'm trying to do two things at once here. If and when it can break above 44, that was that all-time high, I may add to my position, and of course by then, if it breaks out over 42 and continues up here, I will turn my stop into a trailing stop. So check it out. You might want to keep an eye on the CGW during the coming week. And now, before we go on to final thoughts, please know that if you'd like to invest in yourself, would you like to become a better trader? If so, this is the perfect time to check out my trader training programs. You will discover my simple yet powerful strategies devoted to swing trading, trend trading, bottom fishing, and much more. Those strategies that will help you increase your gains quickly and easily. To see them all, go to the link on this screen or simply click on the orange button below. And now for our final thoughts this week. First of all, I have a question for you to ask yourself. This is something you have to think about, and actually this is something that can come and go out of your trading life, as we'll call it. Here's the question: have I allowed the achievement of my trading goals to turn into stressful self-pressure? Have I allowed the achievement of my trading goals to turn into stressful self-pressure? Remember a minute ago when I said being on the sidelines, going to a little bit of cash is sometimes the right thing to do? Okay. If your goals, trying to achieve them, has turned into stressful self-pressure, please know that that is usually the case for traders whose fear of failure and fear of making losing trades drives their motivation. For these traders, motivation and self-pressure are the same thing. This mindset can lead to intense symptoms of stress when goals are not achieved. And at the extreme, this form of unhealthy motivation turns into an obsession with and desperation for success. This trader considers anything less as total failure. Now, look at the other side of this coin, though. Traders on a healthy, motivated track who approach the market in a different way enjoy a different experience. Their goals are challenging but always realistic, which means they are stretching themselves but not to the breaking point. Now, here's some ideas. They don't chase trades as a desperate attempt for a winning trade. And I cannot tell you how many classes I've taught where people have come up to me, traders have come up to me and said, oh, I lost all that money. I got to make it back, so I get into the most volatile stocks I can find. And you know, every time I talk to people like that, I feel badly, and I urge them to stop doing that. Don't chase trades as a desperate attempt to make a winning trade. Please don't do that. Don't make revenge trades. Revenge trades, the same thing. Well, the market took my money, so I'll get the market back. Well, nobody ever gets the market back. Don't do revenge trades, because you know why? That kind of thinking puts a kind of a gray film over your vision of the market, and you don't see things as they truly are. Okay, so people who have a fear of failure think in a different way than we do. They make revenge trades. And please, please, please don't make revenge trades. Also, traders who trade in a calm, confident manner cherry pick their trades. They'd rather make 2 A trades than 5 C trades. And I think we've talked about trading grades in this place before, but if we haven't, we'll do it again. But as you can imagine, there's a difference between making an A trade where you planned everything out, planned exactly where you were going to put your stop, where your profit target is, what the market's doing, so forth. That's an A trade. A C trade could even be listening to someone on TV and immediately buying what they say. It's like, no, 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 no. Okay, also, traders who trade with calm confidence don't snap at family members or loved ones after a losing day. They gain satisfaction from planning every trade and trading that plan. So how much do you enjoy your own motivation, or the reasons you decided to become a trader in the first place? Do you go to bed looking forward to the next challenges of the day? Or do you lie awake fearful about threats to your self-esteem and trading account that you will encounter during the next trading session? If you find yourself wondering how or why your original motivation turned into stressful self-pressure, please, please, please consider reassessing your goals and then rewire your approach to one of satisfaction and success. Finally, if you want to become a consistently winning trader, please check out our easy-to-learn yet powerful online trading programs that will help you increase your trading profits from now on. Again, from swing trading to bottom fishing to trend trading and more, just click on the button below for more information. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.